Welcome to How Do They Afford That, the podcast that peeks into the financial lives of everyday Australians. I'm Michael Thompson. I'm a writer and the co-host of the Fear and Greed Business podcast. As always, I'm with Kathy Campbell, financial planner, founder of Sugar Mama TV, the financial literacy platform that you will find on podcasts like this one, on YouTube, Instagram. You've got books, you've got plenty happening. Hello, Hannah.
Hello, Michael. How are you?
I'm good, thank you. It's been a busy week this week because our credit card got, I don't even know what the right term is for it, but it was being used fraudulently on the other side of the world. Suddenly we were just kind of keeping an eye on I think we might have even been doing a little bit of budgeting and just kind of checking on payments and things, and suddenly noticed that someone had paid for $800 worth of accommodation in New York, then spent $650 at a bottle shop in Connecticut, and then there was another pending payment there as well. So suddenly kind of it was at $1,500, $1,600 and with more to go. So there's a bit of a moment of shock suddenly when you realise that your credit card has been compromised.
Wow.
So straight on the phone to the bank. So that was cancelled immediately, the credit card was, and so it's just kind of working through the process at the moment of the dispute resolution. But my God, it's inconvenient now having to go through and change credit card details with anyone that has those.
It's so funny you share this story because I actually have had my credit card skimmed so many times. And about, it would have been a month ago, I just thought, you know what, stuff it, I'm cancelling my credit card. Because every time I'd have to call the bank, wait for the new card to arrive, and it was taking 8 weeks to be cleared.
Whoa.
And it was happening literally every 4 or 5 months. And so I just went, stuff it, I'm cancelling the card. I'm going to live without a credit card for a while. Now, that's not sustainable because we do need a credit card because we love our frequent flyer points program. And I love the travel insurance and the various perks that can come from a credit card.
Yeah.
So I will eventually look to replace it. But there's something quite light and refreshing about not having a credit card. But I literally cancelled it because I was so sick of it being skimmed and scammed again.
Oh, yeah, it's just a major inconvenience. And it also happened like 2 days before we were going away for a long weekend. And I actually thought at the time, Kenna would not be happy with how I was planning on using the credit card for that long weekend. All the spending was going to go on the credit card while we were away.
So it's a blessing in disguise.
Yeah, I had to go to my backup credit card.
That's not good for your credit score. Multiple credit cards.
Yes, I'm aware of this now. The things I have learnt and the judgment that I have copped, not from you, the self-judgment as I've learnt more and more about it. Today we're talking about insurance, which is something that we've talked about previously a few weeks back. Speaking of judgment, actually, we talked about income protection insurance, and I revealed that I didn't have it. And
have we done anything about that?
Of course we have.
Just so you know, listeners, Michael's shaking his head, looking very ashamed.
It is on the list.
Okay.
I may even do it today.
Life can change in the blink of an eye.
Okay. Consider myself warned.
It's important. Like, you are the breadwinner of your family. Your family's well-being, not just financial well-being, well-being relies on you and your ability to earn an income.
All right. You know what? I will sort this out. I will do this before we reconvene.
Okay.
Anyway, guilt trips aside, we are talking about insurance. Today I want to talk about, though, life insurance, which is a fairly big topic. And it's also one that kind of has the potential to feel a little bit morbid because you are essentially talking about death.
Yes.
But when you talk about kind of the need to ensure that, say, your family and your debts and your various commitments are kind of looked after in the event of something completely potentially unexpected happening, then it is something that we can't ignore. Before we jump into it, though, we do need to mention the fact that anything we talk about today is general in nature. It's always general in nature. It's never personal, investment, strategic, or product advice. It is purely for financial education purposes only.
That's right. We don't know anything about your financial situation, goals, deadlines, or even what your risk profile might be. So should anything be of interest to you, please make sure you go and speak to a financial planner and ask them for personal advice.
When we're talking about insurance broadly, we are essentially talking about wealth protection, isn't it? It's kind of protecting what you've built, protecting lifestyle, and ensuring that you're able to kind of continue to live, right? I suppose it's a different way of looking at it, that it is essentially wealth protection.
Absolutely. There's two, pyramids to building wealth. One side is obviously the strategies. The other side is the protection.
Okay. So if kind of we take that now as the overall kind of theme for this, that it's almost a mindset change, that you're looking at just protecting what you have built. So in doing so, we now transition seamlessly into life insurance. How does it actually work? And maybe this is a bit of a 101 on life insurance. Is there an age at which your policy kind of ceases to work? Because again, without getting too morbid, we're all going to go at some point. And statistically, it becomes more likely the older you get. So is there a point at which your policy is no longer able to pay out?
Well, first of all, life insurance is also known sometimes by the term life or death cover. And essentially it pays a lump sum if you were to die. Now, some policies do actually have a terminal illness benefit, which means if you have a short life expectancy, so say doctors diagnosed you with a terminal illness with less than 12 months to live, the insurance company might pay out your life cover early so that you can see the financial stress alleviate in your life whilst you're still alive. But no two policies are the two same, but generally speaking, these life insurance policies tend to expire or finish up around about age 70.
Okay. All right. And so it is typically a monthly premium that you pay, and it is for a lump sum that would pay out in the event of your death.
Correct. Look, it doesn't necessarily have to be monthly. Some people do pay it quarterly or even annually, because sometimes they can apply a discount to that. But also they may own that life insurance through their direct pocket, or they might own it through their superannuation account.
Yeah, I was going to ask you about that actually, because it does seem like they're the two main ways that you can actually go to an insurance company and get a life insurance policy directly through them. But it does seem like, and again, making an assumption, that a lot of people seem to go through the superannuation path because it's kind of almost built in, and it seems a little bit easier.
Well, yes. So basically it is more cash flow friendly because the premiums are not coming out of your direct pocket. They're coming out of your superannuation contributions or the superannuation account balance. Also, though, the premiums sometimes can be a little bit cheaper because they've got a more competitive group policy. And sometimes there's even less health checks to go through. And of course, it can be more tax effective because the premiums are being paid as a 15% contribution tax, which is lower than most people's marginal tax rate.
Okay, so there are a few of the benefits then of doing it through super. Are there any downsides? I'm assuming there are.
Yes, absolutely. So quite often you can't apply for a large amount. They'll normally have $1 million or $2 million worth of maximum life cover through super. But again, no two policies are the same. So it's worth doing some research and investigating. And of course, there is risk of the cover ceasing, particularly if your superannuation account or insurance policies are tied to your employer, where your employer might be paying for it or paying for part of the premiums, or it's tied to your contract. So you run the risk of, if you were to resign or lose your job, you potentially lose that cover. So you've got to be very careful with what policies you've got in place and what are the terms and conditions in the fine print.
Does that happen often in terms of it being kind of paid for by employers?
More and more employers today will have that as part of your employment contract.
Really?
It's seen as, a financially responsible move because obviously they need to protect their staff and give them a sense of financial well-being so they can focus in the workplace. It makes a lot of sense. And I'm seeing more and more employers put it in as part of the contract, and it's compulsory. But you really do need to read the fine print because you need to know, of course, if you were to leave, is that cover might go. Or if you can maybe buy that policy out and transfer it to your name or transfer it to your superannuation account if you leave. So there's lots of sort of finer details that need to be considered. Also, the other big obvious one is if your superannuation account is paying for your insurance, it's impacting your superannuation account balance. In researching this episode, I actually looked up my own life insurance because mine indexed to the CPI, and I was interested to see exactly how much cover I've got in place. And I also ran my eye over my premium. And as most people's insurance premiums have gone up, mine have gone up quite substantially. So looking at that monthly amount, I was like, wow, I really need to be really careful of the long-term impact of that insurance premium impacting my superannuation investment portfolio.
Do you see instances where people are over-insured for life insurance because they may have it as part of their superannuation, as we've just discussed, but they might also have a standalone kind of policy? And maybe I'm kind of using the wrong terminology here, but having it in your super almost seems to happen by default more easily. Like it's easier to kind of tick that box of, yes, I want that as well. And then all of a sudden you've got 2 insurance policies.
Look, not necessarily overinsured because most Australians are actually underinsured.
Oh.
So they might have, $100,000 worth of life cover through their super, and they might have, $250,000 life policy that they own directly. Now, that $350,000 worth of life cover seems like a lot of cover, but they may have an $800,000 mortgage, 3 children, one of which is in, say, a private school, and they also have a car loan and an investment property loan, and a partner raising the 3 children. That $350,000 worth of life cover may not touch the sides if something was to happen to that person. So just because you have multiple policies doesn't mean you're overinsured. You need to look at the cumulative total amount that you have in force.
Okay. We'll come back in a second, and I want to talk to you about how you figure out how much you actually need, because that is, again, kind of going into this situation with all the information you need to ensure that you've got adequate cover, whether it is through super or whether it's through a policy outside of your super. The main thing I would imagine is to make sure that you have enough. But how do you actually do that? We'll come back in a moment and find that out. Canna, we're talking about life insurance today, which is obviously a fairly kind of meaty topic, and it shouldn't be a depressing one, even though it kind of is triggered when somebody passes away that this payment comes through, but it should be seen as a form of kind of wealth protection and kind of providing cover and providing kind of surety and continuity of a lifestyle that hopefully you've kind of set a family up for. I wanted to ask you about how we calculate how much we actually need. But before we do that, I was thinking through that break about something that you mentioned about superannuation and about having your policy through superannuation. What happens if you stop making payments into your super? Say you've stopped working, say someone has left the workforce for a period, whether it's to raise kids, and that super fund is not receiving money for a period. Is the insurance policy still valid?
Look, that's actually a really valid question, and I'm so glad you brought this one up, because if you are, for example, on maternity leave for a year or so and you have no superannuation contributions going in, you are at high risk of your superannuation account cancelling your insurances. So it is so important that you check all your insurances through your superannuation, and if it looks like you run this risk, you contact your insurance provider and you complete something called an opt-in form, which is essentially where you tick a box and sign it and send it back. But it lets the insurance company know that even though you're not making any contributions to your superannuation, you still want to keep your insurance active and in force. Now, the reason why they brought this rule out was because, I guess, ASIC and APRA were concerned that a lot of people with small superannuation account balances were having their balances eroding away with premiums of insurances that they didn't necessarily need. So having this inactive rule and risk really does put the onus on you to make sure you understand what insurance you have in place, what insurance you need to keep, and making sure that it's the right amount for your situation and your family's long-term financial well-being.
Wow. Okay. The system is obviously then set up to look after people in terms of look after their super balances, but it does have this little side effect.
Well, the other thing is, and this is what a lot of people don't think, they go, oh, it's fine, I'll just let it cancel and I'll just reapply when I go back to work in a couple of years' time. That's all good and well, but what if you've had a change in health and you no longer qualify for the same level of cover, or you have loadings and exclusions? So you would have been potentially better off to have kept that in place and kept that premium going and have that cover. And what happens if you actually suffer something whilst being on maternity leave? That would mean that you no longer were able to claim on that life insurance. So it is really important that you know what you're doing. It's active if you need it.
Okay. How do you work out how much cover you actually need?
All right, another great question. You're full of great questions today.
I'm full of something.
So look, the Money Smart website actually has some brilliant free tools. And you can actually put in your situation and it can help you as a guide, not a personal strategic advice, of course, but as a guide, it will give you an idea as to how much cover you need. So, for example, I'm happy. Would you like to be used as an example, or would you prefer me to?
Oh, well, use me.
All right.
I'm basically here to be used as a dummy for anything.
So, do you have a home loan?
Yes.
Don't worry, you don't need to tell me.
Okay.
Okay. If you were to die today, could your wife service and pay the mortgage on her own?
No.
No. Okay. All right. So that would mean potentially you would need enough money to cover your mortgage. So that if something happened to you, if you were to drop dead right now.
I love how you're trying to be so delicate around this.
Yeah,
but you know what? Okay, let's just assume that the worst happens. Yes.
Yes. So you would need to maybe have enough money to pay off the mortgage for her so that she could live in an unencumbered home and continue on caring for your 2 children.
Yep.
Okay. Do you have a car loan?
No.
Do you have credit card debts?
Yes.
Okay. So would that be stressful for her to have to deal with the trauma of losing you, caring for the kids on her own and having to manage the credit card debt? Does she have an income to pay off that credit card debt?
Well, she works. See, this is where I see your point that you're making, in that she works basically on a freelance basis, and so that's very unpredictable. And so suddenly they would be trying to service a home loan and take care of the credit card debt and kind of any other bits and pieces on an income that is entirely variable.
Okay, I'm going to play devil's advocate because I think this needs proper eyes wide open responsibility and accountability taken here. So she's now a single mum and she's a freelancer. Who's going to look after the kids so she can go and work?
Yeah.
So you'd probably need to cover maybe the cost of a babysitter for, say, 30 hours a week or 20 hours a week or something, depending on what your routine is for the kids. So you can see how quickly the need of how much cover you might need. Now, you might have investment loans, which I don't know about. We could sit here all day and add up how much you need. You then might want to deduct, though, from that total amount, how much money you have in superannuation, because obviously that goes towards, maybe helping alleviate some of that financial stress and pressure. But the other question you have to ask is, with your wife's income stream, is it enough to maintain the family's living on her own? Even though the mortgage is paid off, does her income cover the cost of living for your family?
Right. Yeah.
Yeah.
Well, I hadn't. That you kind of assume that it's just the big ticket item that you pay off the home loan and away you go. There's still groceries.
Yeah.
There's still your power bill. There's still kind of costs associated with the kids in school and medical bills and all this kind of stuff, that just the daily cost that we have budgeted for and discussed at length. Suddenly you've got to make sure that you still have enough money coming in the door to cover those everyday expenses.
Exactly. And yes, you could say, well, it's fine, she'll just downsize. But imagine losing your partner and then having to sell the family home and move the kids who are already suffering, and you're going through a trauma. For the cost of peace of mind, you really need to work out whether it's worth paying. And I shared in our previous episode, I've had personal insurances since my early 20s, and I have, even though my premiums are through the roof, I would never, ever consider cancelling them at all.
Yeah.
Because I go to bed at night knowing that if something happens to me, Tom's stress and pressures are alleviated and he can keep his head above water and keep our children in the same lifestyle. And the same for Tom as well. I've insured him to the hilt.
Yeah. And look, we have actually taken the same approach. and that as far as life insurance goes, we have been kind of well covered, well insured now for a very long time. And same thing, I will never change that. As I described in our previous one, the only reason I don't have the income protection insurance was because my work circumstances changed. And I think I was on one of those legacy, what was the...
Oh, yes, it was an indemnity
policy that was actually tied to my income at that time. But no, in terms of life insurance, I can see the value of it. And you're right, it actually helps you to sleep at night knowing that if something was to happen, you wouldn't be leaving a financial mess. There'd be enough to deal with without kind of having to worry about whether you could actually kind of pay the mortgage and survive.
And if you want to wake up call, jump on the GoFundMe pages, see the families that are trying to raise money, with kids that don't have parents. Like, it's heartbreaking, absolutely heartbreaking. So, pull up your big boy, big girl pants and look at this with responsibility. And I went through a claim. A client of mine got very, very sick very, very quickly. And even though I had all the insurances in place and we had a lot of cover in place, towards his last few days, I remember leaving his home and thinking, even though I've insured him and at the right levels of cover, you still could have justified a bit more to just make the remaining spouse that little bit more comfortable and secure. And they were relieved that they had that insurance in place because it meant they could keep the kids in the family home. They could keep the kids in the schools that they were going to. They could still be able to afford a holiday overseas each year. It is really important that you look at this. And some people say, well, what happens if I never claim? Like, what a waste of money. That's a very simplistic way to look at it, and probably one that's a little bit naive and ungrateful, because that means you've never been sick or died.
Yeah.
So I don't look at the money that I pay, even though it kills our budget for our premiums. I never question the value of that. I'm happy to be paying it because it means I'm still alive and Tom's still alive.
Yeah, and you're paying for peace of mind.
Exactly.
Very briefly, last one. How do you actually figure out how much cover you do have?
The first place to check would be your superannuation statement. But if you're feeling a little bit overwhelmed, and I say this because someone messaged me this morning saying, I don't understand how to read my super statement. Obviously, make an appointment to go see a financial planner. But in the meantime, call the superannuation account provider and say, look, can I please speak to someone just for a couple of minutes that can explain to me what my superannuation statement is and how to read this?
Yep.
And a lot of these superannuation account and insurance lines often have, some general inquiry lines when their staff are pretty informed and educated and they're really patient and kind and explaining and talking you through everything. So look at the statement, see what types of cover you have in place and how much the premiums are. Ask if there's any loadings or exclusions. So, for example, I remember looking at a client's policy and they were down for their life and TPD policy as a smoker. They'd taken the policy out years and years ago. And when I asked them if they were still a smoker, they said, oh, God, no, I quit like 7 years ago. And so we were able to contact the insurance company and say, look, they haven't touched a cigarette for X amount of years. Can we switch the premium to a non-smoker now? And of course, they had to sign a statutory declaration and fill out a whole pile of paperwork, but it meant the premiums could now go down. So staying informed of what you're paying for is definitely worthwhile. And then, of course, always ask for a copy of the PDS or NDS so that you can read the terms and conditions, because the devil is always in the detail. And a lot of people don't realize, they think life insurance and income protection and TPD is only for when you're at work. No, you could be skiing in Aspen, or you can be tap dancing around Lake Como, or, climbing a mountain in South Africa. You are still covered. So you do want to check, obviously, the terms, but you are properly covered around the world. And it's worth looking at a quality insurance company and a quality policy, and that's where the value of a financial planner can come into place. And the other little catch, some private health insurances, or private health insurance providers, I should say, or credit card providers sometimes have a sneaky accidental death cover. Often this can be like a $50,000 life cover if you die through an accident. So leave no stone unturned. Contact your credit card provider and private health insurance and see if there's some sort of little life insurance policies attached there.
All right. Fairly confronting one, but it's such an important topic. Actually, before I wrap up, is it ever too late to get into this? Like, it's something that you should be looking at while you're still healthy, isn't it? Before you kind of feel the niggle, before you need to go to the doctor, before you kind of get the call. I think you referred in our previous episode that the moment the doctor calls you to say, hey, we've got your test results back, come back in, it's too late.
Yeah. Look, I mean, you can still apply for it, but there'll probably be loadings or exclusions or other terms and conditions. So apply for this sooner rather than later.
Yeah, don't leave it till you need it.
Exactly. And if you look at how much cover you need and it's, you look at it and go, wow, I actually need $800,000 worth of life cover, but the premium is, say, $300 a month, I can't afford that. That doesn't mean you completely park the policy application. Perhaps you look at what you can afford because it's better to have something in place rather than nothing at all.
Okay. All right. So it is such an important thing to be looking at. And there are obviously the two main ways that people do it: through separate policies, independent policies where they go directly to an insurer and take out a policy there, or through superannuation, which we spent a fair bit of time talking about because there are some benefits to the superannuation ones in terms of kind of freeing up cash flow, perhaps tax benefits to doing it, potentially cheaper premiums because it is essentially a group policy, but there's also some cons to that, some downsides, including maybe lower limits that you can apply for. And that point that you made, it is such an important one, that if you leave the workforce, if you are not putting any money into your superannuation for a period of time, that you just need to check to make sure your superannuation account is, if it's deemed as inactive, that you do run the risk of your insurance that's attached to that being cancelled. So just make sure that you fill out the opt-in form to ensure that that policy remains active. Working out how much cover you need is really a very personal thing. And it's something that you could potentially work through with a financial planner who would be able to kind of assess kind of where you're at, but also something that you can just start with the Money Smart website.
Yeah, they've got some great tools there.
Yeah.
And a financial planner will shop around, find you the best policy, because remember, no two policies are the same, and find a way of structuring it so that he could fit your budget.
And if you think that you might have life insurance cover, if you know you do, but you're not sure how much you have, just check your superannuation statement, call them up if you need to, get them to explain it, how it all works. Check your policy. If it's an existing policy with another external to your superannuation, just check the details and make sure you go through all of the details because, as you say in pretty much every episode now, the devil is in the detail. And you just need to be sure of what you are covered for, because it is something that it is too late to apply for it when you actually need it. So you just need to kind of get onto this kind of thing as soon as possible. And if you need advice, go to someone who is professionally qualified to give it.
And one last thing I should put in one. Sorry, Michael.
No, okay. I can get 9 out of 10. I'm happy. So I consider this a pass.
It most definitely is. But you need to also think about if you have multiple policies and you think, well, I've got one policy worth $200,000, another one worth $300,000, I need $800,000. Don't cancel any policies until you have your replacement new policy in force and in writing that it's in force, because you never know what might happen to you in the meantime. And that, again, is why you should really go and see a financial planner rather than trying to figure it out yourself.
Yep. No, great point. All right. If anybody wants more information, where do they find you?
Oh, I would say every Monday morning on Sugar Mama's Fireplay podcast, and then on Instagram at Sugar Mama TV.
And you can hear me every day with Sean Aylmer on Fear and Greed, Australia's most popular business news podcast. And you can also buy my novel, How to Be Remembered, which is available wherever you buy books. Thank you very much for listening to How Do They Afford That? Remember to hit follow on the podcast. It is very important so that you get the new episode automatically every Wednesday. And please, if you are enjoying the show, leave us a review too. It is always exciting to see those. Next week, we are talking about something that is coming up. It is rapidly approaching. It is tax time. Well, it's just around the corner, and we've got a bunch of good ideas that you might be wanting to think about now so that you are in a good position come June 30. It will be a cracker of an episode. Don't miss it.